Hey guys, it's Stu with Lucid Investing. It is, the day is September 27th. Finally have a reason to get on and do a quick market overview since we've finally taken out a level. First and foremost, I will say it's still very, very uncertain as to where the market wants to go, and I'll talk through that here in a second. It has been pretty difficult to trade the past few days, and the market conditions have been very uncertain just due to the nature that we have not taken sell side liquidity until today. And again, on ES, that was at 36.55, or MES Z22, it was 36.55. And on MNQZ 2022, it is 11,134. So these black lines that I've marked here. Right away, you can notice that from a daily perspective, you can see that MES has taken sell side liquidity, right? So we have gone through that level, and NQ has not, MNQ has not. So that is why things are still uncertain and why we're probably not seeing a huge ramp or shift in market structure, even though we've created one on ES. Right now, as a matter of fact, we have a divergence. And I'll delete some stuff to show you all that. Right now, we've got a divergence. So if this is a low, even if it's not right now, we've already kind of put in some lows right here. We have broken a lower low, or we've made a lower low, and we have a higher low on NQ. So this right here, as it stands, is a huge, huge bullish divergence, which would take us back up to these liquidity zones. Fair value gap here, fair value gap there. And you can see the other zones, right? So we've got this high to pay attention to as a target for MES. And then we've got this high. We've got a fair value gap. We've got this high. So buy side liquidity, fair value gap, aka liquidity pool, fair value gap, liquidity pool, buy side liquidity up here. And then you can replicate the same things over here on NQ. Let me go into a 15-minute time frame to show why we were looking long after we took out sell side today. Once we took out sell side, and you can even see it better on the 15-minute, this has just been a huge, huge consolidation range. We've had a high up here, low down there, then we broke the low. This was our daily range of sell side liquidity. And once we broke that, we were looking for potentially a shift in market structure bullish. And since we did not do it on NQ, I believe that's why we're seeing such a difficult time and continued accumulation down here. So NQ is still reaching for this target, and if it does not, that's a very clear indication that we are certainly going to go up, and not just go up, but we're going to fly upwards. Now, from a macroeconomic standpoint, seasonality standpoint, all things are kind of pointing towards continued red and bearish sentiment. So there's a lot of uncertainty as it pertains to sentiment. Where is the market going next? Those of y'all that have been trading, we've been able to capture some profits, but it certainly hasn't been as easy as a few weeks ago. So if you've been on the losing side of that, or if you've been struggling, just know it's because there has been significant economic calendar events. There has been really just unruly price action. We've taken out sell side. It took us a while to, we came like 5 handles away from it, bounced. We haven't even touched it on NQ. So it's just been very sloppy, and it just hasn't been ample or high probable market conditions to trade. So going back to our shift in bullish structure, we put in, I'm trying to zoom in a little bit more for y'all. So I'm going to take my range right here to give us our equilibrium. We've got a swing high right here that we were looking to take out once we cleared sell side liquidity, which is this black line. We've got our swing high labeled right here, and then we created displacement, right? So we created our displacement from here to here, took out that low, took out that high, and then we've got a fair value gap right here that we have been bouncing out of left and right. What do we also have? A bullish order block, right? So price came down right about to the 50% of that order block, came right below our fair value gap, and then we pumped right up. So this is why I've been saying long is the move right here. And as you can see from this range right here, it might be a little hard to see, but that is well below our 50%. Anything below 36, 54.25 is our equilibrium of this displacement. So you can see right now this price is still live. This is about 4 p.m. market. Essentially, closing bell just rang. Futures will stay open until 4:30, and then we'll close it. Actually, I think they stay open until 5. I'm not sure. But anyway, this is still live data, so we could see some fluctuations as I'm talking through this. So we did look for long right here, and there has been, this was an A+ setup, right? This is the shift in structure bullish. We had it on the 15-minute, which is even nicer. Very clear, only one fair value gap coupled with an order block. Really high probability of that playing out. Now, what was the risk? So I'm going to get rid of some of these lines and this fair value gap to make that a little bit clearer. Assuming you were to enter at the top of the fair value gap, top of the fair value gap's right there. Your stop, from a conservative perspective, would have been equal to the low of that order block or just below the 50% of that order block. If you were very conservative, you can see that if I were to take a fib at the 50% of this order block, we broke right below that 50% and bounced straight up. You would have been stopped out if you had a very conservative stop. All right. If your stop was below, you're still long here. You haven't gotten stopped out yet. Well, what is the risk? Risk was about 16 handles from the top of this fair value gap to make first trim would have been about 25 handles. So you've got a 1 point, let's call it 5R. So you're risking $1 to make $1.50. And then your second price target would be right up here where we enter this fair value gap. And then you've got another partial up here. Ultimate target would have been the highs up here. So you had a 1.5 risk to reward there. Bring it up just a little bit, takes you to about 1.6. Take another partial in this fair value gap. Take it up to our third partial. Takes you to about 3.5R. Like, this is getting really good. But obviously the problem was this happened at the end of the day. So you would have been stuck holding this overnight or relying on the Asia session to pump this to the target. So there was a lot of variables here and a lot of reasons why ultimately price didn't execute the way that we were expecting it to. So, the point of it is you need to assess, like I've talked about, I think it was the last video I posted, the risk relative to the reward. So in a scenario where you took the fair value gap at the highest potential part to make sure that you were in the play, you would still be weathering a storm. You'd still be red right now. At the very least, you would have had to have had your stop somewhere right up here, like I said earlier. And if it was too conservative, you would have been stopped out. Let's just assume you had it at the low down here. Best case scenario, we were taking a partial at the 50. That's not even a 1-to-1. Let me get that to the actual. That's exactly a 1-to-1 actually. So the frame of this trade, you would have had to assume, just because we're saying go long, you need to start paying more attention if you're assuming you're following the alerts or following the chat. This is more so directed to the folks in the group right now. You need to be better about, if you aren't already, assuming that risk versus, hey, we're going long here and just looking at the potential, what could I make? And if you haven't watched the risk management video and you're not continuously profitable, or you're losing money, that's where you need to start to understand how to frame that better. But we're taking this play right here, this bullish shift in structure, is a much longer time frame shift in structure. Remember, we took out, on a weekly, we took out sell side liquidity. So if you're somebody who swings and you're in a swing position here, if I clean up all of this right here, I'll mark our sell side out real quick. Your first target, the reason why, this really is potentially bottom, is because this is the buy stops that we're going to be hunting for up here and right here. So when you look at it that way, that's a huge move. But what do you have on the way up? Fair value gap right here. You have an order block right here. Your 50%, assuming this is the low, is almost dead on the 50% of that order block. It's a little difficult to determine, are we going to continue lower? If we do bounce up, where are we going to bounce up to? I would imagine we're going to bounce up to somewhere around that equilibrium at some point. We still need to put in the low. So it was important to know that if you were going long today towards the afternoon session, I think 1 p.m. is right when the first shift in structure took place. So if I go to 1 minute in the group, right at 1 p.m., this was the long that I was hoping to execute, and it did not end up playing out. And the frame was based off of the same model we were just talking about. So this is why I went long earlier today and got stopped out pretty quick. We took out sell side liquidity, which is this black line again, came back up, created our swing high. All right, we bounced around a little bit. We're waiting for this swing high to be taken. Boom, it gets taken. What time is that? Almost 1 o'clock, right after lunch. And what do we notice? Fair value gap. So this is where I was alerting 36.51.25. I was long at the very top of this zone right here, and my stop was down here. We came, bounced around for a second, and then ultimately got stopped out in the grand scheme of things. And it's good to reflect on trades. It's good to run those back and understand why. Ultimately, we could probably tie it to the fact that NQ is still trying to seek sell side liquidity. So in conclusion, we are still in somewhat of an uncertain area here. I'm not going to try and call certain levels. I just walked you through the levels that we could go towards. But ultimately, it looks like long is still the play. This is playing out rather nicely. However, we are going into the Asia session, and it'll be interesting to see what price tries to deliver to. I would expect at this point price to deliver to at least 36.84, and then probably try to either go for lower lows out of this fair value gap or order block right there, or we could take out the high. So it's a very uncertain time. We've taken out a very crucial sell side liquidity area, and this is one of those times where you want to focus more on wealth preservation than trying to catch the move. The move could either be down for lower lows out of this area right here, or we could start hunting for those higher highs that I showed. Now, if we're looking for a structure shift on the daily, right, we have to come all the way up to this swing high, retrace, and then go. So it's going to be a while before we've got a longer term shift bullish. If we want to start looking at something like a 4-hour, we've got this swing high, which we did take out. We probably want to be respecting this swing high right here. So we'd need to come all the way up to the top of the range to have a longer term shift bullish. And if we look on a 1-hour, it's the same deal. That swing high right there needs to be taken for a long-term shift bullish to take place. So we need to see price all the way up to 37.32. We need to see it run past it, create a fair value gap on the way, and ideally we would enter a fair value gap in a 50% or lower position in a discount market to ride the rest of this area. Now, what's interesting is this fair value gap that I've got drawn out here is exactly where the top of that range starts too. So there's a lot of uncertainty here. Don't be in a rush to try to enter positions. I would say focus more on intraday scalps right now. Swinging right now will absolutely get you smoked because it is not clear. So I hope this was helpful. Until next time.